Hey everyone, and welcome to this explainer. Today we are unpacking a really major shift in the Indian financial markets. For years now, the National Stock Exchange's SME platform has been this phenomenal launchpad for growing businesses, right? But migrating from that platform to the highly coveted, exclusive Mainboard, well, that is about to get a lot tougher. We're going to look directly at the NSE's stringent new rules that are completely redefining what it takes to join this VIP club. If you track market regulations or just follow SME growth stories, you absolutely need to know these new benchmarks.
Okay, let's dive right into this. What we have is the official NSE circular from the listing department dated April 24, 2025. And honestly, this isn't just some minor update. It's a complete top-to-bottom overhaul of the eligibility criteria for migrating to the main board. The stakes here are incredibly high, and the clock is actually ticking because these rules take effect on May 1, 2025. Companies looking to make that leap have a really narrow window to make sure they meet these newly elevated standards.
So here is our roadmap for today. We're breaking down a dense regulatory document into 5 critical checkpoints. 1. The main board gateway. 2. Strict financial thresholds. 3. Shareholder rules. 4. Compliance records. And 5. The application checklist.
All right, checkpoint 1, the main board gateway and its baseline requirements. The NSE is making it absolutely clear right out of the gate, you cannot just bypass the line or use the SME platform as a quick little stepping stone. To even apply for migration, a company must have been listed on the SME platform for at least 3 full years. 3 years! This ensures that any business moving up to the big leagues has a proven public track record of stability, operational maturity, and real experience dealing with public market scrutiny.
Moving right along to checkpoint 2, strict financial thresholds.
First up in the financial gauntlet is scale. A company must report revenue from operations greater than 100 crores in their last financial year. That is a massive filter, right? It guarantees that by the time an SME even approaches the main board, it's already generating substantial, proven business volume. And just so you know, if consolidated figures aren't available, standalone financials will be evaluated. But that 100 crore mark, that is a hard line in the sand.
But wait, the crucial point here is that it's not just about top-line revenue, it's about sustainable business models. The NSE requires a company to show a positive operating profit from operations for at least 2 out of the 3 preceding financial years. Basically, you can't just buy growth at the expense of profitability and expect to migrate. You have to prove consistent, verifiable profitability over recent years.
Next, we look at the financial foundation itself. The net worth of the company must be at least 75 crores. And you know what? The exchange doesn't just take management's word for it. This net worth must be explicitly backed and certified by a statutory auditor. This just adds a vital layer of security and trust for those main board investors.
And the final financial checkpoint involves your actual market presence. The company needs a minimum paid-up equity capital of 10 crores. Paired with that, the average market capitalization must be at least 100 crores, and that's calculated over the 3 months immediately preceding the application date. This basically ensures the market itself is already valuing a company at a level appropriate for the main board.
Okay, checkpoint 3, shareholder rules and ownership structure. To ensure adequate liquidity and broad public interest, the NSE draws another very hard line here. They demand a broad and active public investor base, requiring a total of at least 500 public shareholders exactly on the date of the application. It's their way of proving the stock has genuine retail or institutional traction before moving up. Now, what's really interesting here is how the NSE handles promoters. At the time of application, the promoter group has to hold at least 20% of the company. But check out this temporal anchor. Their holding actually cannot drop below 50% of the shares they originally held way back on the date of their SME listing. This elegantly ensures that founders keep significant skin in the game, so they aren't just using the SME platform as a quick exit strategy before moving to the main board.
All right, checkpoint 4, compliance records. And let me tell you, the NSA has a strict zero-tolerance policy here.
They demand an absolutely spotless legal and regulatory record. Just look at these deal breakers. No proceedings admitted under the Insolvency and Bankruptcy Code. No winding up petitions. No debarment by SEBI for the company, its promoters, or even its subsidiaries. No disqualified directors. And no material regulatory actions, like a trading suspension, in the past 3 years. Seriously, one past mistake can completely halt the migration journey.
And this extends right into day-to-day investor relations. If your company has pending investor complaints in the SCORE system or recent defaults on debt to bond or fixed deposit holders, your journey stops right here. Additionally, if the stock was recently under surveillance or in a trade-to-trade category, there is a mandatory 2-month cooling-off period before you can even apply. The message is loud and clear. Clean up your house completely before knocking on the Mainboard's door.
Finally, we reach checkpoint 5, the application checklists and the logistical process.
And this brilliantly illustrates Part A of the application, which demands a massive volume of compliance. The NSE requires a very dense list of categorized documents. You need statutory auditor certificates for net worth and fund utilization. You need board resolutions and postal ballot notices to prove shareholder approval, secretarial compliance reports formatted in XBRL, and scrutinizer reports that explicitly separate promoter votes from public votes. It's practically a full-time job for any company secretary to track this.
Then we get to the final submission process for Part B, which is entirely digital. Step 1. Everything gets uploaded to the NAB system, including granular details like director PANs. Step 2. You remit a processing fee of 2,50,000 rupees plus taxes. Step 3. You await the exchange's review, which generally takes about T+7 working days. But a quick heads up, if the exchange raises queries, the company must respond immediately and absolutely no later than 30 calendar days, otherwise the whole application can just be returned.
So, we've seen the massive financial hurdles, the zero-tolerance compliance filters, and the intensive paperwork required by the NSE. The Mainboard is clearly protecting its prestige and ensuring only the most robust, transparent, and profitable companies make the cut. So, I'll leave you with this provocative thought. With these rigorous gateways taking effect on May 1, 2025, is the SME sector truly ready for the Mainboard's new era of exclusivity? Thank you so much for learning with us today on this explainer, and we'll see you next time as we continue to unpack the forces shaping our markets.